Hi guys, and welcome to this update on Ark transactions that have happened over the last week. Here we'll talk about Ark's biggest bets during that week of 26th of July 2021 in under 5 minutes. This video is not investment advice. It's been a big week with over $1 billion in purchases and over $1 billion in sales. The big buys: Teledoc, Ark's high conviction stock, second only to Tesla. Robinhood, we finally saw the IPO of one of the most upcoming fintech stocks, and we always knew Ark was going to go for it. Finally, UiPath, yet another week of solid investments into UiPath. Other noticeable investments were in Twitter, Unity Software, and Exact Sciences. On the selling front, the onslaught on the big Chinese tech companies continues, with some serious sell-offs at JD.com, Tencent, and Pinduoduo. A crackdown on the education sector companies in China has spread to tech stocks as well. This unpredictability of the Chinese government has resulted in fear, uncertainty, and doubt, and investors are generally running away from these companies. That said, the fundamental businesses of these three companies are still very strong, and those fundamentals haven't changed, just the sentiment has. Cathie reckons that there's been a valuation reset, and this will probably stay for a while. So with that summary out of the way, let's do a mini deep dive into the top 3 stocks they bought. First up, it's Teledoc, and some serious coin at $170 million. A lot is happening at Teledoc. They announced their results last week, and it was very good. Total revenue more than doubled year over year, and the company is raising its revenue expectations for the remainder of 2021. However, the stock fell 10% after the announcement came out. While most of the loss recovered over the second half of last week, there are still some concerns that investors have over Teledoc. There's new emerging competition. It's not just Amazon, but also America's largest health benefit manager, United Health Group, and nimble startups like Talkspace. So Teledoc's thin margins are going to get even thinner. At the same time, chronic care enrollment in Livongo Health that it acquired last year has reduced in comparison to Q1. However, the bottom line is not as bad as it seems. Most of the 86 cents a share loss stem from acquisition-related expenses. There are new products, new partnerships with insurers. Microsoft and Teledoc are partnering to integrate Microsoft Teams into Teledoc's telehealth platform. This looks like a pretty smart move for both companies. Microsoft is entering that attractive healthcare sector, and this gives Teledoc the opportunity to piggyback off the success that Microsoft has had with Teams. It should also allow Teledoc to better defend its turf against Amazon Care once that's launched this summer. Key statistics are also improving. Revenue per member per month, a key metric, improved 10% since Q1 and 142% over the prior year. Q2 utilization rates were also higher. Visits increased 27% year on year, even though infectious diseases related visits have fallen. Stock is still 50% down since Feb, but it is holding near its 50-day moving average line. If that continues, it should start to form a base for a bullish pattern. Analysts reckon there's a 40 to 100% upside over the next year. One big question for me is whether Teledoc is being primed as a takeover target for one of these large tech companies. We'll need to wait and see. Robinhood finally debuted in the markets last week, and Ark have put in a 9-figure investment. It doesn't look like it'll stop here, and more is likely to come through in the coming weeks. The hotly anticipated debut was a little disappointing. At one point it was nearly 12% down, but finished the week at around 8% down. A number of factors have contributed to this. Essentially, institutional demand for shares fell much lower than expected. Negative sentiments around the GameStop controversy, where Robinhood restricted trading, contributed to many retail investors buying with the intention of selling on day one. Employee and directors could also offload 15% of their holdings on day one. So plenty more selling than buying. The debut draws parallel to what happened with Facebook back in 2012. Back then, the stock fell a further 50% from its debut price before rebounding quite nicely. All said, there's one big risk factor. 80% of the Q1 revenue came from sending its customers stock, options, and cryptocurrency orders to high-speed trading firms, a practice known as payment for order flow. This is the practice that allows it to maintain zero fees, which retail customers like you and me love. The regulators, however, do not like this, because it could discourage Robinhood to obtain the best trades and the best spreads for its customers, as now they have a conflict of interest. So the Securities and Exchange Commission are now investigating this practice, fueling speculation that it could be banned. That would be a disaster for Robinhood. Is this still a $30 billion company? Ark seems to think so, but if you're investing, be careful, as this one may bite. Finally, another busy week of buying at UiPath. That's over $300 million invested in July alone, which makes it the #1 most invested stock for the month. Stock has been flat over the last week and still around 10% down since the first days of its IPO. Here are the top 10. Unity has crept up a couple of spots, whereas Twilio has dropped the same. I hope you found this analysis useful. If you did, please do consider subscribing and smashing that like button.